investors need to understand about an IPO, right, is that a majority of those shares are going to big institutions. And you have to just think of the economics and the incentives here, right? So I admittedly don't know who the lead underwriter is for SpaceX. Let's call it Investment Bank X, okay? Investment Bank X is basically taking the company public, along with some other,
Usually
there's some
Bank YZ are
right.
helping
There's some
out. Yeah.
other there's a whole table of underwriters, but usually there's a lead, and we're just going to call this lead Investment Bank X because we don't need to get into all the intricacies of this to make the point that I'm trying to make. They are going to go to their most profitable institutions and say, hey, have we got a hookup for you? Because you do so much business with us, right? As we think about how an IPO works, right? So you're Mr. and Mrs. Smith, and let's just say you've got a really big portfolio. You're probably not getting allocated shares if it's a really, really awesome IPO. It's just the reality of it. So then when I see in the news yesterday that Fidelity has lowered the minimum amount of money you have to have at Fidelity to get into the SpaceX IPO from $500,000 to $2,000 to make it more accessible to the retail. What does that tell you about the institution's appetite for that? Like, there is something really sour tasting about when all of a sudden people at Fidelity with a $2,000, you can open up an account for $2,000 and put in to get an allocation. I just don't know how much that's really, what that says good about. It's either they're trying to get this thing oversubscribed so it looks really popular or what. But, I come back to, if you didn't get into the IPO, I wouldn't think twice about it at all, especially with the way some other stocks have been doing in just normal portfolios. So I just hope people don't get all wrapped up about the SpaceX IPO and make poor decisions.
Yeah. And I got good news for everyone. Eventually, you're going to own a piece of SpaceX if you own any index ETFs.
That's right. Yeah.
Or any index property. It's going to be a large company. It's going to be part of the S&P 500 ETF at some point, the Russell 1000, maybe even the NASDAQ. It's tough to predict, but normally what happens with an IPO is when a company becomes public, there's a time limit that these index providers, whether it's Russell, MSCI is another big one, the NASDAQ, S&P 500. Normally you have to wait about a year before you're even eligible to be included in their index. Well, SpaceX has been so popular that there's been petitions from the industry to get them included faster. So here's the update. Most of them were accepted, meaning SpaceX is going to be included in Russell indexes, so things like the Russell 1000, the Russell 3000, 5 days after it starts trading. Basically, it's going to start trading on Friday. By the end of the next week, it's going to be in that Russell index. Meaning any ETF or fund that tracks the Russell 1000 is going to be buying a piece of it. They're going to have to be buying a piece of it so they can keep their allocation like the index they're tracking.
Right.
The MSCI, it's going to be 10 days. NASDAQ is saying 15 days. Here's what's really interesting to me. The only one to reject the petition is the S&P 500. So S&P 500 said, no, we're waiting a full year before index inclusion for SpaceX.
Okay.
So while everyone else is going to be putting it in quickly, you're going to get allocations through some way, shape, or form of these index funds at some point. You don't need to be a part of the IPO to capture its growth over the long term, which, again, I don't think is going to be exponential. But I do think there's potential that it could be a good stock over a 10 to 20 to 50 year time period.
Concur.
If everything goes right.
Concur. Right. But so yeah, you're not really missing out.
Miss out.
Right.
Yeah, exactly.
Well, okay. I'll even give you a more extreme example. Okay. Everybody knows how well Apple has done as a stock, as a company, blah, blah, blah. Okay. So let's just say you didn't get in to the Apple IPO and you just bought it regular market when it went public back in 1980 and you held it for the long term. You're very wealthy if you did that. Okay. And if you held it through all of the turmoil and everything like that. But what people don't remember about Apple back in 1990 was that it went public at under $2 billion which was about 15 times revenue. Okay, so $2 billion, 15 times revenue. SpaceX wants you to buy at a $2 trillion valuation, which is about 100 times revenue in 2026. Yeah. Okay. People who are buying SpaceX are not getting in early. Okay. It's the truth. That's right. This is an exit strategy for the venture capitalists who bought into SpaceX years ago at a fraction of what the general public is being asked to buy it for at the initial trading.